Good morning, everyone. This is Financial Literacy 101. And today I'll be talking about a very large ETF, which is ARK ETFs. Now, the CEO of ARK ETFs is Cathie Wood. She's worth around 200 something million dollars, but she's been making a lot of moves in the investment game. So without further ado, I'm going to go and we're going to walk through all of these ETFs. We're not going to do a full review of each one, but we're going to kind of do a brief overview of each one to see if it's going to be worth your money to put inside. Now, just give you the bottom line up front, I can tell you right now, most except for one, which I'm not going over, most of these ETFs are doing very, very well, okay? So starting off with the ETFs will be the ARK Innovation ETF, okay? So over the past 5 years, it's been up 402. The past year, it's been up 134%. Past 3 months, 27%. Past month, almost 15%. The past week has been down 4.4%. And then today, after hours, is only up around 0.3%. Now, this particular ETF is actively managed. And this is the one thing I used to always tell people. Try not to get yourself involved in actively managed ETFs because they have a lot of hidden costs as well as a lot of taxes because, again, they're not passively managed like index funds. But when you have an ETF that's actively managed, that kind of dwells inside the realm of a mutual fund, okay, which these are also called too in a sense. But nonetheless, this may be profitable for your portfolio because we understand the only way that you can do primarily well if you're investing anywhere from 4 to 6 stocks, individual stocks in those different sectors I went over last week. Now, this is a way to hedge your stocks with index and ETF funds, as well as some bonds and also commodity like real gold and silver and also platinum palladium. But nonetheless, it says that the target companies poised to benefit from the disruptive innovation in one of the 3 areas, industrial innovation, genomics of web, and then the listed name for it is ARK. ARKK, that is a symbol that you guys will be looking at, okay? So let's move right along. You got your dividends only at 0.07%. There's really nothing, we can look at the 52-week range, which has been 33 to the lowest and 106 to the highest. And currently, ladies and gentlemen, it's right under $100, okay? Right under $100 per share of this particular ETFs. You can see the collectibles, it came out in 2014. And then the growth and value ETF, okay, the growth and value ETF is growth and value ETF. All right, moving right along. Here's the thing. They have a whole lineup of different ETFs. You have your ARK Next Generation, your ARK Fintech Innovation, your ARK Geonomic Revolution ETFs, your ARK Autonomous Technology ETFs, and the list goes on and on. Now, instead of using MarketWatch, I want to bring you over to Yahoo Finance. Another great tool for you guys to put in your tool bag when you are looking over, reviewing your own stocks for your own particular choice in your portfolios. And again, you have your add to watch button. That's again, if you have a profile with Yahoo Finance, you can start adding particular stocks that you want to watch. And then you can put tickers and stuff in place and thresholds to see, hey, if it goes up this amount, I'm going to sell. If it goes up this amount, I'm going to buy, etc. Okay. So as I get into this, let's look at this further. So another good tool about Yahoo Finance, what I like is you got 1 day, 5 day, 1 month, 6 month, year to date, 1 year and 5 year, and then max. I absolutely love it. And when I look at the max, I see that this ETF primarily was moving sideways. Okay, it was moving sideways, but then all of a sudden, boom, COVID-19 hit, and then they shot way up. And as you can tell, a lot of these ETFs have been doing that. But through the years, ladies and gentlemen, this stock has been doing very, 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 very well. I mean, now we get into some more of the details of this particular stock. Let's see what's interesting. We got the yield at 0.21%, the expense ratio. Now, I know a lot of you trying to compute what's the expense ratio. The expense ratio of an ETF is the operating cost. How much does it cost for this investment company to operate the stock, to put together, and how much is going to charge each investor? So if it's at 0.75%, I want you guys to look at it like this. If you were to invest in this stock with the current expense ratio. Let's say, for instance, you put $1,000 in your initial investment, okay? But you didn't add any other money until you just put $1,000 in there and you just let it sit so it can grow over the course of time, okay? So that amount will cost you at the end of the year $7.50. Let me bring over something I put together for you guys. Let me bring this over so I can show you exactly what I'm talking about, okay? All right, so here's an expense calculator, okay? Now, for the 1 year, this is for 1 year of that particular ETF, it returned 133.84%. My initial investment is $1,000. The time horizon is 1 year, and the fund expense ratio is 0.75. Look at the return. Look at the return of ARK on that particular ETF. What the return would have been over 1 year. Okay, you put $1,000 in. Look how much you would have grown, and then that's after the cost of fees. Okay, $2,338. Okay, so again, this is the one I'm referring to. Let me go back. I don't want to lose you guys. Stay with me. Here's the year. Here's the year. You see the 133, right? 133.84%. Again, that tally is based upon 133.84% for 1 year, because that's where the percentage was. In your initial investment of $1,000, you would have incurred $2,330.90. Then after the cost of fees, which is only $7.50. So you're probably trying to compute what is a good amount that you shouldn't go over when it comes to expense ratios dealing with index and ETF funds. Anything from 0.01 all the way up to around 0.75 right here. This is kind of the highest when it comes to low fees. This is the highest when it comes to low fees. When you start getting into 1% and 1.5%, that is considered very, very high expense ratios. Now, let me walk you through this again, because we talked about the expense ratio, so we don't know how much it's going to cost us for the year to have that ETF. We went through the 52-week range. I love that. Really good profit margins there. We looked at the yield. Where's the dividends at? Looking for the dividends, the dividends. Oh, the yield. But they didn't break it down like they do in MarketWatch, where they kind of give you the percent amount. But let's see. Let's see what I can find here. But I can tell you right now, ladies and gentlemen, that based upon $100 at, let's see what the dividend rate was. Let's go back. Dividends at 0.07%. I don't see it over 20 cents, ladies and gentlemen. I don't. But nonetheless, let's move on, because I know you want to see the rest of these. ARK Next Generation Internet. Now, look at this. Let me blow this. Let me reduce this a little bit. Get everything in here. Over the course of 5 years, it's been up 430%. The past year, it's been up 139%. The past 3 months, around 28%. The past month, around 16%. The past week has been down 1%. And then today, really moving sideways after hours. But nonetheless, ladies and gentlemen, if we go back here to the 5-year mark, again, COVID-19 affected it. And then from that point, it's like a rocket ship. All of these ETFs that I'm showing you, it's like COVID-19 gave it some renewed growth or something, okay? And I know a lot of these, the ones that I'm showing you, are pretty high, okay? Pretty high. But again, Robinhood, Webull, the links are in the description. You can invest in fractions. That means that you don't have to go out and invest $118. That means if you want to get in on some of these percentages, you can actually invest $10, $15, $20, whatever you have to spare. But again, you need, in my opinion, you need ETFs and index funds to hedge, to balance your investment portfolio, okay? Now, this one is the Internet ETFs, okay? It is an actively managed fund with a broad mandate to invest in companies its managers have identified as benefiting from an infrastructure shift away from hardware and software toward cloud and mobile. The listed name for ARKW is ARK Next Generation Internet ETF. The dividends right here, ladies and gentlemen, is 0.09%. The 52-week low is $40. The 52-week high is $122. They're doing very, very well. Okay, we kind of went over the ETFs and the release date. And here are the other ETFs that we may be going over, okay? Let's move on to Yahoo. Let's get into it. Here is the max of the stocks since the inception of 2014. Okay, as you can tell, moving sideways, start to tick up. Boom, we hit a valley, and then boom, rocket ship. If you notice, I'm telling you, a lot, as you heard on the news around the world, there's been companies who've been bankrupt, and there's been companies who's been making triple the amount during a pandemic. Okay, and these guys are not into pharmaceuticals. This is the internet ETF, but then again, we are all on the internet, and I can understand the analytics why this one actually went up. What else is pertinent to note here? We'd already went to the 52-week range. The expense ratio is a 0.76%. Okay, that's still at the top low tier of high. That's not bad. The year at 0%. I didn't see none over here at Robinhood either. Let me double check. Okay, yeah, 0.09%. That's why I like to balance all of my tools, because some of them just don't give you accuracy when it comes to looking at dividends and other pertinent information. Okay, so that one is a good one as well. That's ARKW. That's the internet one. Let's move on. Now, ARK Geonomic Revolution ETF. Look at this one, ladies and gentlemen. For the past 5 years, it's been up 263%. The past year, it's been up 145%. The past 3 months, 30%. The past month, around 19%. The past week, it's been down 6%. And today it's kind of been zero, okay, after hours. Now, this is an actively managed fund that targets companies that involve the genomics industry. Now, the dividends is only 0.06%. We got the 52-week low at $24 and the 52-week high at $76.22. Ladies and gentlemen, you guys would have made double the amount on your investment. 40-something dollars. Well, I'm sorry, excuse me. You probably would have gained 200% in your investments right there. If you would have gotten in at $24 and it went up to 76, we're talking about double your investments, ladies and gentlemen. That's how important getting the information and investing early, okay? Investing early. Let's go over to Yahoo, all right? We're looking at the max here. Look at the max of this particular stock. Again, we're talking about ARK Geonomic Revolution, okay? Here's the max. We're looking at the max. And again, pretty much moving sideways. We had some little dips here and there, but as we continue to go up, this is probably COVID-19. Nope, that's not COVID-19. COVID-19 was, wow, where was it? Back here. Okay, this must be a newer stock, but we'll get into that. But nonetheless, it's been trekking right up. Okay, so really good financials there. Let's see the inception date. Okay, 2014. That's when it actually started. We went over the 52-week range and yield 1.63%. Okay, so that's kind of reflecting those dividends of 0.09% that you saw earlier. Okay, and I don't know. See, that's what I'm trying to tell you guys. Information is vital, because when it comes to the amount of dividends and when they're pay out and when they're giving you this amount and how they're changing the dividend percentage, it really requires what platform updates the soonest. And when I know about Robinhood is a great investment platform for beginners to intermediate, but a lot of power investors probably don't invest with Robinhood or Webull. They probably go over to TD Ameritrade, maybe Charles Schwab, Fidelity, like those big power and mentor investors. They may have a Robinhood account, or they may have a Webull account that they're just playing around with, or just doing some side hustling on, or teaching their kids how to invest with, because we need pertinent platforms that are going to upgrade and update the information daily, if not hourly, while the market is live, and even on the weekends, because again, here it is, you're trying to get all of your information and research so you can invest a day before the markets open the next day, whether it be Saturday or Sunday, and you're trying to invest on a Monday. Okay, because some people may do 1 or 2 trades a week and they'll make 10 grand, they'll make 20 grand off those 2 investments. That goes back to having that portfolio with only 4 to 6 stocks. Because again, you can be spread too thin, okay? You can be spread too thin. You know how you was making Kool-Aid, right? And the packet says for every packet, 1 gallon of water, but you're like, I only got 1 packet, but I got 15 people. I need to make 1.5 gallons. And then when you put it in there, you put the sugar in there, it tastes water. You don't even really taste the Kool-Aid. That's what I'm kind of saying. You got to keep it concentrated to a certain amount where your profits increase exponentially off those 4. But again, You want to be spread very diversified, but not too many stocks, okay? So again, 4 to 6 regular stocks, and you have your ETF, you have your index funds, you have your bonds, then as well you have your commodities, okay? Let's move right along. We have ARK, autonomous technology, and robotics. These people are in everything. I'm loving it. All right. The past 5 years, they've been up 239%. The past year, they've been up 89%. The past 3 months, they've been up 19.5%. The last month, they've been up roughly 16%. The past week, they've been down almost 2%. And then today, they're probably zeroed out. Okay. Here we go. It says that ARK Autonomous Technology and Robotics is an actively managed fund with a broad mandate to invest in companies that it manages identify as benefiting from automation and other technological advancements. Okay, and we know the listed name is ARK. Look at the dividends here. We're almost getting up to 1%. We're at 0.45%. The 52-week low is $26.19, while the 52-week high is almost $64. That's pretty good, okay? Here are some other ETFs. Now we go over to Yahoo Finance, and let's look at the max. This is probably back. Yep, there it is. That is your COVID-19. But from there, they were going up the mountain, up. Now, this is a great graphical representation of why you guys should not be emotional investors. I'll have some of my clients, as well as some of my subscribers on my YouTube channel, to come and tell me, hey, man, you know, this particular stock, this particular security has been down. What should I do? Should I sell? And I say, no, man, you need to hold your investments. Now, if you want to sell, you want to shave some off the top, then we can talk about that. But when it comes to selling, this is very important. A lot of people sold here. A lot of people sold here at $27.51. You see the black line? You see, if you scroll to your right, you can see the $27.51, ladies and gentlemen. As I tick up, you see it going up. Now, from that moment on March 18th, when COVID-19 affected this particular stock, okay, as you can tell from that point, it went up to $30. Look at this, $27.51, $30, $39, $40, drop back down to $39. Now we're at $47, drop back down to $44, but it's still going up. It's going like boop, 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 back down, boop, 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 back down, but it's still going up. Then here we are. Look at this. $62 drops back down to $50-something. $58 drop back down to $54. Now it's up to, again, $63. So this stock is doing very good. Very good, okay? That's why it's important for you to keep your assets. Okay, 52-week range, we went over that. There it is. And then let's look at what's pertinent. They don't have the yield listed, but we found out on Robinhood nonetheless. Expense ratio, again, all of these are roughly around the same. So they're at the high point of low expense ratio, which is perfectly fine, okay? So for every $1,000, you're going to pay $7.50 that the money on your return. Not a bad deal at all. Let's move on. ARK Fintech Innovation. Okay, this one came out February 4th, 2019. So let's just go a year back. Let's do that. Let's just go a year back, even though it's more than a year. But as you can tell right here, ladies and gentlemen, that is when COVID-19 hit. But for the past year, it's been up 98%. 98%, okay? And then again, this is Fintech Innovation. In the past 3 months, let's look at that, excuse me, it's been almost 28%. The past month, around 14%. The past week, 0.21%. And then today, at a measly 0.02%. All right, this deals in the actively managed fund of stocks related to financial technology innovation. The listed name is ARK ETF, okay? You got your price earning ratios. We talked about that last week and the week before that extensively. So I know you guys are up to speed with that one. The opening price is $42.80. Now, the 52-week low was $17 roughly. I'm right here. And then the 52-week high is $43.78, okay? Then we have the sector ETF. Now, all the ones I went through, have you noticed that this one is the least amount of money? And again, this is at 2019. Okay, this was released in 2019, February. So why is this important? Now, let me go back to one of the ones I went to the first time. Let's go back to one of the very first ones, okay? So if we go back when this stock first opened up, this stock right here opened up at $20. $20 5 years ago. Excuse me, around 6 years ago, right? You see that? $20.12, November 3rd, 2014. And then again, what I love about Yahoo, they give you the exception date that it came out October 30th, okay? So we're going back as further as Yahoo's going to let us, which is November 3rd, 14. But it was $20.12, okay? Let's move on to the next one. Inception date, September 30th, 2014. Okay, 2014. Let's go all the way to the end where we can get to October 6th, 2014. This was $18.95, but today it's $118. I'm trying to get somewhere. You guys understand what I'm getting at, right? It's good to buy now. Now, you might don't want to get into these other ones. I think all of them are great to get into. They keep rising. Let's move on to ARKG. Now, the exception date, October 30th, 2014. Let me go all the way to the end here, to the max. December 27, 19, it was $34.43. And then today, this is $70. It doubled its price in 5 years. That's how you double your money with investment. And that's why you be a patient, non-emotional investor. I'm going to give you one more example. The exception date, September 30th. We're looking right here. We're going to go to the beginning. This is December 31st, 2019. This is $37.19. Why is it going back that far? That's only last year. But nonetheless, you get my drift. I don't know why that one is doing that. That's so weird. But nonetheless, it doubled its money now to $62.42 from $37. Okay. So when I look at this one, it tells me that the inception date was 2019, February 1st, okay? And I max this one out. I go all the way to the end, and it shows me that this particular stock is $20.53. Now, it's only been on the market for about a year and 7-8 months, and it's already doubled the amount that it came out at $20, at almost $43. So what that tells me, what I need to do is I need to go in here with this particular stock, and the amount of money I have right here, which is only a measly $12. Okay, first I want to, what do I want to do? I want to go in shares. So I got to figure out how many shares I want at $40. How much do I want to spend? That's what you kind of do. Like, yeah, $128, $29. That's where I'm at right now. Let me just look at 4. Let me see how much that gets me to. Nope, I'm not willing to almost spend $300. Because you have to also know your budget. See, when I'm up here and you say, hey, why not buy 10? Why not buy 11? Why not buy 12? Because I'm looking at my budget. I don't have that much money to be investing all of my money into one stock, especially almost every stock I show you I invest in, okay? So nonetheless, I'm going to buy 3, and hopefully Robinhood does this. You know how Robinhood could be. I got to deposit the funds. I'm going to put in 130. All right, deposit the funds, Robinhood, and we're back. So now I'm up, but I want to invest all of this money. So I'm going to change this. Instead of shares, I'm going to change it into dollars. Okay. I'm going to go 141.98. Review my order and buy. So that's going to be good. Bam. There it is. So I invest into ARK Fintech Innovation. Now, let me move on. Let me show you some other information that really was an eye-opener for me, how I really dig deep into my research and how I give you guys research. I believe I give good research, but this kind of solidifies it. You know how sometimes you need to check and balance, trust but verify, so saith the Russian proverb. But nonetheless, let me show you about Cathie Wood, the one who's the majority owner in all these ARK mutual funds, okay? So let me show you what's going on with her. So you got Fastly, ARKW, you got Power Technology. We've been going over PLTR for a long time. Zoom, Tesla, Roku, you got all of these ones up here. All right. Now, what happened after pre-announcement third quarter? Fastly saw shares drop 30% after hours. That led to the opportunity for ARK Next Generation Internet ETF to take a stake in the company. Now, I wish I would have known that, because I would have invested my money into the internet one, because then I would have gained that percentage in profits. Then you have the Next Generation Internet, say Cathie Woods. She bought 300 and 4,000 shares of Fastly. Her stake is around 1% at 27.3 million shares. I'm getting somewhere. Stay with me, guys. The fund also bought small amount. Listen to this. Small amount of Palantir, I just go Pal Technologies and Zoom video communication. What is pertinent about this? What is pertinent about this? Why am I bringing this up? Because I want to show you this. Okay, because where is it? Let me get back to it. Give me a second. Thursday. That is when this transaction happened. This is when this transaction happened, when they was on the plunge, and I was teaching you guys something. So with that being said, let me show you this. Let me show you this, okay? This is the video I did on Thursday. Remember how to research a stock, and I use Pal Technologies, and here me buying a dollar amount in shares, a fractional shares. Remember, estimated shares 13. Remember that. This was live. This is me on Thursday, the same day that it dropped, and I said, this is a great time to buy, and I invested my money. Why is that pertinent? Because when you got big movers, okay, when you got big movers like Cathie Wood going in and buy Pal the same day I did, you can tell that a lot of investors are on the same page about the value of a company, okay? Let's see if there's anything else pertinent to report. Of course, they bought Pal and Zoom, and they said the ETF sold parts of its stake in Tesla. They sold some of their Tesla stock, but they bought Zoom and Pal Technologies, okay? They said over 26,000 shares of Tesla were sold, representing around 12 million. The sale represented around 0.4% of the assets. And then Woods, this is Cathie Wood again. ETF also sold shares of Salesforce, Roku, Square, Xenix, and Lending Club Corporation, okay? So there you have it, ladies and gentlemen. That is your stock review for today. As you notice, I went and I invested around $140-something with the ARK ETF. That's the Fintech Innovations. But again, there's a whole lineup of these ETFs that all of the research, quick research, you can tell consistently they have been going up. So this is a great time for you guys to invest. Don't miss the opportunity, because when you miss the opportunity, you miss profits, and profit is simply money in the bank. This is Financial Literacy 101. Learn money and be inspired. Talk to you guys on the next one. I'm out.